The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
The Terra Luna ecosystem on a wild ride, stablecoin UST dipping as low as 60 cents last night when it was supposed to be pegged 1-to-1 to the US dollar. Luna, which is supposed to be minted to stabilize UST, has lost over 40% of its value over the past 24 hours. Joining us now to discuss is Bennett Tomlin, co-host of Crypto Critics Corner. Hi, Bennett. So, in many ways, this was predictable. It just happened faster than expected. The Luna Foundation Guard has been working to prevent this implosion by pivoting and stocking up on BTC reserves and other cryptocurrencies so that UST is not just backed by the minting and burning of Luna. So what went wrong? Maybe you could walk us through what happened last night.
Well, I don't think it's 100% clear exactly what went wrong and what started to go wrong really on Saturday. The entire system basically depends on a collective belief that Luna is valuable, which gives value to Terra, the derivatives of it. And so the best understanding I can come to is that for some reason, people started to lose some amount of confidence in the system as a whole. And as it did, it became increasingly hard for it to maintain its peg. Because the way you keep it is by people exchanging their dollar worth of Terra for a dollar worth of Luna and minting that. However, when the price of Luna starts to fall, minting more can have a depressing effect on the price of Luna. They tried to defend against this somewhat by using the Bitcoin reserve, which they had to deploy, but so far that seems like it's been insufficient.
Mm-hmm. What do you think triggered this in the beginning? I mean, there are a lot of theories out there that maybe Citadel was involved, A16Z was involved, but you also have Jump Capital, who has been backing Terra Luna and potentially injecting their funds into it as well.
I have not been able to figure out who did it yet. I think the Citadel Ken Griffin story is the one I would pick if I was writing this up as a piece of fiction, just because it's the most exciting. People have suggested that it might be Justin Sun doing it to try to promote his own algorithmic stablecoin, but I don't think it was that, because I think that shaking the faith in the largest algorithmic stablecoin is likely to shake the collective confidence in algorithmic stablecoins as a whole. And so for Justin, doing that when he's about to launch his own would be counterproductive. There was one theory going around on Twitter yesterday that someone had actually opened up a large Bitcoin short and were using the attack on Terra as an indirect way to get their Bitcoin short to pay out by effectively forcing Terraform Labs to use their reserve of Bitcoin to stabilize the peg. And so by forcing Terraform Labs to sell and use that Bitcoin, they hoped to depress the price of Bitcoin, which is a fun theory, but I have yet to see enough evidence to definitively say who was doing what last night.
So Bennett, I mean, obviously, I don't want to say you got out your dancing shoes to dance on any graves last night, but I'm sure you're seeing this from a different perspective, and that is that you find something not quite kosher in Terraform Labs and what they're doing. Can you explain what bothers you about how they're reacting in this crisis?
I don't necessarily know that how they're reacting in this specific crisis is any of my issues with Terraform Labs. More broadly, my issues with algorithmic stablecoins, like as a concept, because they effectively depend on this financial alchemy of convincing a sufficient mass of people that a thing with effectively zero intrinsic value has enough value to stabilize this massive ecosystem of stable assets. And I think that that is a challenging bit of alchemy to maintain, but that it's a very popular bit of alchemy because while you're building it up, while you're doing all the unsustainable things like subsidizing the anchor yield and trying to grow the demand that way, there are many people in the ecosystem who can make money from those unsustainable efforts. And so during the growth phase of an algorithmic stablecoin, they're always very popular. And then at the point when they're finally large enough to become an attractive target, they depeg, a bunch of people get hurt, and then everyone just goes, we were just trying an experiment. How were we supposed to know this was going to happen?
So you see that you think that they might be able to restore the peg. We're looking at essentially Luna would have to fall in price, correct? I mean, they would essentially have to sell Luna to buy UST to bring back the parity ultimately.
But are they doing that, or are they just lending out from the reserves that they built?
Exactly.
Right.
They don't necessarily need to mint and sell new Luna anymore because they created the Luna Foundation Guard with this multi-billion-dollar reserve of Bitcoin. And so they can instead use those Bitcoins to try to do open market operations to defend the peg. And in doing so, they prevent the minting of more Luna and further price pressure there, but it necessitates using their reserves.
How do you think those... How do you think those reserves are being used? Like, they're lending it out to these market makers, and then what happens from there? Because they're maintaining that, oh, we're not selling Bitcoin, but what is exactly happening to the Bitcoin that they're lending?
I'm not 100% sure.
Nobody
My guess
really
is we're not selling it as a bit of talking around the problem. Like, we loan this much to market makers, they pay back whatever they end up not having to use, and we didn't really sell the part that we don't get back. It was just the market maker doing open market operations. And like, I think that's probably also why the loans are structured with like both Bitcoin and UST as part of the loan, just so that the market makers can easily use both sides of the liquidity to basically effectively try to trade it back up and make these buy orders. And so they're perhaps not directly selling Bitcoin, but I imagine throughout this process they'll end up with less Bitcoin than they started with. So
Bennett, I guess the question is, what do you think the outcome of this is going to be? Because it seems like there's two camps. There's, the so-called dancing on the grave camp who's like, this is the end, it's finally blowing up. But then there's this sort of like really devoted community who, I think there's a possibility that this could end like, okay, we triumphed over this adversity, look at how resilient we are. I mean, it doesn't seem like that's impossible, right? So how big a blow do you think this will actually be to this model? Or are they just going to kind of survive and say, like, we prevailed over this?
I think it's helpful to look back at March of 2020 for Terra and Luna, which was the last time we saw this really massive peg break and the threat of like an impending algorithmic stablecoin death spiral. BitMEX ended up closing their Luna market, which slowed the price fall for long enough for bidders to step in, stabilize the market as a whole. They eventually returned it to peg, and it has been mostly at peg since then. And so I think that it is possible they'll be able to burn through a portion of their reserves and the funds they have, bring this back up to peg, and keep it functioning for a while. But every time something like this happens, every time there's this peg break, these destabilizations, it becomes harder to restore the confidence and faith of the community as a whole. And so therefore more expensive to restore and maintain that faith. And so for now, they have these Bitcoin reserves. They still have some Terraform Labs fund they can use to, for example, increase the anchor yield and try to increase the demand to slow the fall. But these things are inherently unsustainable and depend on them having these access to funds outside of the protocol itself. And so they can do it for now, and they can continue to use these reserves to try to return it to peg and keep the system functioning. But at some point, you run out of funds. There's a finite amount of money you can throw at this thing to keep it running.
Yeah, well, they
I mean, this is the fundamental question then. Why use UST at all? If you can't necessarily, if you can't assume anymore that it'll be pegged to the dollar, why would you borrow it or lend it at all? Why would anybody use it in, say, DeFi? Why would anybody use it as a stable coin if it's not stable? I mean, is this spell the end? It's been well over, it's been several hours, and that's an eternity in DeFi. So what is this? This is necessarily going to be the end just because it can't maintain the peg for 24 hours, let's say.
I think one of the many reasons people have used Terra in general is because you've basically been able to take money out of Terraform Labs' pocket and put it in your own, right? Is because they've been subsidizing the yield and doing all this, and that for most of its history, it's done a pretty good job of remaining stable. So it seemed like a worthwhile bet to get some Terra and to use Anchor, either directly or through something like Abracadabra's Degen box, to get this subsidized yield and take the money from Terraform Labs, basically. I think it is plausible, at least for a short term, Terraform Labs can find enough money to incentivize enough people to want to continue doing that. Long term, I'm not confident that will continue to work, but it is possible to me that they would be able to keep it functioning by finding a way to make it worthwhile for people to continue using it.
Well, certainly they have convinced so many investors, institutional investors, to invest in this, and a whole community who wants to buy into this 20% annual percentage yield on Anchor Protocol, which may not be worth as much now that UST can't maintain its peg with the US dollar. But you also mentioned something else, exchanges, and I wonder how they're coordinating, because we hear that Binance supposedly has a floor on, how much UST will go down. I wonder if you have any further insights into that.
Yeah. So it's possible to construct what they're doing as analogous to like a circuit breaker, right? If Terra has suddenly dropped by like 30 cents, that's a pretty radical move in a stablecoin. And I think that it is plausible many markets might circuit break something which had like a 30% drop. The more challenging part is the fact that like Binance shut off withdrawals and stuff. And so they had put in this price floor, stopped their own trading, and then you couldn't even remove it to take it somewhere else or do an on-chain swap or anything like that because Binance had shut off the withdrawals. That becomes a much trickier situation. And it takes us back to March of 2020, which I mentioned just a couple minutes ago when BitMEX shut down when Luna was crashing. And many of the traders who were trading Luna at the time and who are still part of the Luna community appreciate that BitMEX did that because by having that pause, that period there, they were able to coordinate it and get enough bidders to create enough demand to eventually return the system to a mostly functional state. I think that the habit of centralized exchanges of doing things like this is long and well known at this point. And so it should be a part of your risk analysis if you're holding crypto on exchanges or using crypto exchanges at all, that they might do this to you.
So clearly Binance's calculation was that they were trying to stave off some even worst case scenario. What might have happened if Binance had not intervened?
Well, yeah. It's possible that Binance was trying to like save the system as a whole, and it's possible they had just set up some naive limits or something before and weren't anticipating this system being under that kind of stress. Because like the stated reason for shutting off withdrawals is that the Terra chain got congested and fees were going up, right? And so it's possible they had a limit like that pre-programmed where if the fees go above a certain level, these go off. And they just had not anticipated that happening in this kind of situation. If the Terra price had continued to fall and people had kept aggressively trying to use the arbitrage mechanism in the protocol, we would have continued to see minting of more Luna into the market, which likely would have continued to depress the Luna price. And as the Luna price continued to fall, it makes each subsequent mint, each subsequent new Luna released into the market have there's less demand to soak up those Luna, and so they keep affecting the price more and more, making it harder and harder to bring the system back to parity and back to peg.